The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 40. Nasdaq is up 7. S&Ps are down 3. Gold contract down $3.10, $12.53. You get silver down 20 cents, $15.95. Light sweet crude, man, $72.70 a barrel.
Why is it under 73?
My God, I'm telling you.
Quite
man.
a number, man.
Amazing.
For sure.
Notes and bonds. Notes and bonds. Bottom line, folks, they went topside again yesterday. Had volume behind the move. They're flat this morning. 120.11 on the 10. 145.06 on the 30-year bond. King dollar. King dollar down 94 ticks. Trading 94.875. The euro is 115.85 to 1 U.S. dollar. The yen is at 110.30 to 1 U.S. dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. Don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand strategies. You want to understand option strategies upside down. You want to understand futures. Great program. When we left Kevin yesterday, we were talking a VIX at 16, which is a 1% move. Bottom line, man, it comes out of nowhere.
Quite a day yesterday.
1% up, 1% down, 1.5.
1.5, right?
Yeah,
Totally.
Wild. Kevin Hinks, what's going on?
Good morning, guys. Happy Thursday. We know we're getting to the end of a week. Some pretty interesting economic data we're getting here. Kind of a middle of the road, not a real shocking number out of third look at GDP. Came in 2.0%. The GDP price index 2.2. And the real consumer spending, a little bit of a miss, a 0.1% miss at 0.9. This market is drifting here. The E-minis are about to go positive here as we're speaking, as the only market that's now down as we sit here is the Dow futures. So this market's starting to drift a little higher, guys. Interesting couple days, though. A late day sell-off yesterday, as so far this morning, not following through as we've kind of digested this move here. So,
yeah,
day for sure.
You know, Kevin, when we ended the conversation yesterday, I love the, how you explained that, okay, we have a 16 VIX, saying a 1% move, because when we were on the air with you yesterday, it seemed like the market was going to be flat. And
I got the chart up here. We're looking at 10:55 yesterday. It seems like, let's see, we closed the S&P at 2742. I say closed for that bar at 11 a.m. Eastern time. 2742. And before long, we were trading at 2700 almost, man.
And it
by
came
the
out
end
of
the
nowhere.
day.
I know. And, and you can see the bulls and bears fighting, meaning even today going both ways, right? So it's really intriguing understanding the option market and what that VIX says. It says, okay, man, it's not telling you which way it wants to go, but you gotta hang on because it's gonna move.
Definitely.
Yeah, the VIX at 18 right now and some change, 1820 as we sit here. They've got a little bit of risk premium built into this market, and maybe they should, based on some of the rhetoric, based on, I think, in my opinion, we're getting in the final stages of these trade talks. You can tell, Tom, because the zeros are getting bigger and the rhetoric's getting louder.
Final stages of the trade talks? Yeah. All right, we're going to remember that one, Kevin. I don't know, but we'll see what happens.
Well, I guess July 6th is supposed to be a big day, right? July 6th, that's when, there's certain tariffs that are going on.
Okay.
That's, so... before we know it, we're going to be into July 6th. And as we were saying, what's intriguing is that, normally at the end of the month, you get window dressing happening, you get some buying. It's going to be intriguing here because, if you're running money, it's like, okay, you got to be off next week. What do you want to do?
Well, July 6th is a week from tomorrow. It's Friday.
Is it?
And next week we're closed on, of course, the 4th, and we get a half day with the market on Tuesday the 3rd. So, yeah, it's going to be a total chop of a week.
Yeah.
Yeah, I mean, it's getting volatile as we sit here.
Yes, yes, it is.
I just glanced back up, man. Dow down 71. Yeah, quite a little.
And what's going to get intriguing?
A little thin.
Yeah, and folks, we haven't had, I would say, a volatile market like this for about a good it seems like 7 or 8 years.
I know. I was thinking. I was like, you better go big, man.
No,
right, 'cause
exactly.
it has, yeah.
You know, because yesterday I was looking at the Bloomberg coming across, and I says, "Hold, man, something's wrong here." You know, 1 second we were down 124 in the Dow, and the next second we were only down 35. It's like, wow, did someone just take out
quite
Boeing?
a pop in the early day,
exactly, right? Exactly. So.
And then you got Amazon.
But, they don't ring a bell or give you any notice when the market's about to get a little choppy and volatile.
Yeah, I missed that text.
Everyone has to, pay attention to the news. Make sure it's not. Some of it's just going to be noise, and you got to make good, solid trading decisions and make sure at the end of the day that your trading account's not a bug on the windshield of a larger market move. Right? You want to be prepared for what you think is going to happen. Right now, we've got a big number coming out tomorrow. Again, the last of the 3 numbers this week, personal income and outlays, and that's not going to be. That's a big number for the bonds. It's a big number for inflation.
Yes.
So we've got one more hurdle to get through this week.
And so, and I mean, you're in Chicago. So do you think most people are going to be basically splitting out of there by noon tomorrow?
Yes.
Yeah, that's what I was thinking.
I can say that you're already seeing diminished volumes and kind of a thin whippy market here. So
yeah.
I would just tell everyone, be careful here. This is a time where there's less eyes on the overall market, and there's just less people playing. So, moves will be exaggerated, and not only will they be exaggerated, Tommy, but they'll run out of gas as well. You know what I mean? So, it'll take less volume to move the market, but then it won't be able to hold the market. And so, yeah, just this is the time to use the old cliche, keep your powder dry, and digest a bunch of this information.
Because you can see how it sets up with Monday being the only full day. You could realistically only take 1 day off of work, right?
Right.
And you get Monday, Tuesday, and Wednesday essentially right into Thursday. So yeah.
And what's cool, Kevin, you being in Chicago, and I'm sure New York. Well, I don't know if New York acts as well as Chicago, but because, folks, if everything is so central in Chicago where the exchanges are. Just even at lunchtime, going down to lunch, you can almost see are there a lot of traders there or not? Because going up and down those elevators is like, okay, man, you can feel it, right? You might not be in the pit anymore, but you can feel the energy, right?
And Tom, now, you can feel it in the traffic. You can feel it in the amount of people on the train.
Yeah.
Now, I drive in at an early morning, so I beat the traffic, but, you can just see it in the overall volumes of people in every place that people are thinning out here. People are staying home. They're just not coming down into the city to work. So, yeah, this is not a time to be making big bets on this market, in my opinion.
Yeah, no, listen, man, that's what's so great about the option market. That's the reality. Defined risk is so important. And, folks, every trading day right here, 11 to 12, great program, Kevin and his team. If you haven't test-driven yet the Thinkorswim platform, come over to our website, hit the banner, bring it up. It'll allow you to trade with paper money. It's a beautiful thing. Kevin, you have a great one, a safe one. Of course, hey, listen, have a great weekend too, man.
Always great talking to you, Brian.
Thanks so much.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 60. NASDAQ is up 2. S&Ps are off 5.5. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 70. You get the Nasdaq flat. S&Ps are off 6.5. And Amazon is putting a wrecking ball today inside the health business, right?
It's not the first time they've put a dent into the other healthcare company. I say other. They're not a healthcare company. They're an everything company. But yeah, check out those decliners. Walgreens Boots.
What?
So much for...
What is it, the third day in the Dow?
That's what I was going to say.
Third
so
day.
much for buying the stock right when it gets in the Dow, right? Man.
Down 10%.
You know there had to be people who said, you know what, I'm going to buy it for like a couple weeks. Maybe we'll get a pop in the beginning of the Dow.
Right.
People buying it, thinking, talk about reverse psychology.
And think about the fund managers that had to buy it.
Yeah, for them, I don't worry as much as in. That's the Dow. They're not making decisions,
Yes.
That's, regardless of basically anything. But,
and you get a monster ABC down.
Yeah.
Look at this thing. This is a monster, folks. And this is actually, I believe it's been in a couple ABC structures down.
Okay, so it did have a couple good days the last couple days, though, to put it. I mean, if you take out these last two, what are we looking at? Is that, oh, no, it's a weekly. No wonder I was like, what's going on? I didn't realize it was up yet. So quite a tough
68
week.
to 59. And you're blowing away a B point, and the A point is $80. The B is 61. So you're talking about approximately $19, which gets you a $50 price tag.
You would have to feel a little bit robbed if you, let's say, had the diamonds or something like that, and they pull out GE right as they pop 10%, and they put in Walgreens right as they drop 10%, and you say, come on, man, what's going on there, right?
I'm telling you, pretty wild. I mean, it's so...
And did you have,
PillPack, that's what it's called,
Yeah,
right?
they bought, I believe it's a private company, right? I was trying to see, did you have the article up? No, can we go to the top? Because when they just put across the board all of the different equities, nope, that's not it.
Yeah, I got it this way.
There we go. Oh, nope. I was looking for your article you clicked on, maybe not, right?
Yeah, that's interesting, yeah.
Okay. So yeah, they didn't announce the terms, and what we were trying to pull up is you just had an article that went over the variety of stocks that are down between 7 and 10%.
That was that in the den?
Okay, maybe it was.
Yeah.
Perfect. Can I see it, please?
Yeah. There you go.
There we go. So, man, Dave White in there posting. Yeah. So, Rite Aid down 10+%. Walgreens, of course, we just looked at down 10%. McKesson down almost 8%. Cardinal Health down 7.4%. And AmerisourceBergen down 6%. And what I said is, can you pull up Amazon here? Because it says, and I think I saw the headline, it's like $12 billion in market cap between the variety of those companies.
Yeah.
And Amazon not really up, which is interesting, right?
Yes.
So it's like, you can't suck out that type of market cap from those companies without it going somewhere. Who's going to benefit? It's obviously going to be Amazon. That's what they're banking off. And Amazon, maybe that's where it's just kind of priced into Amazon already.
Right.
With the types of multiples on PE and so forth.
In the drug business now, lock, stock, and barrel.
Pretty remarkable to see that type of drop.
So, Thursday.
Thursday.
Natural gas, right?
That is correct. So let's jump over. I'm going to jump over to the Nadex platform. So we get our natural gas numbers. Thursday, 10:30 a.m. Eastern Time. We get the EIA inventory numbers. Yesterday, quite a number for oil, right? In terms of, I believe the draw was like 9.9 million barrels. Estimate was 3 million. Of course, oil nearing $73. Natural gas, some volatility as well, though. I mean, just pulling back the chart just since this morning, since almost 8 a.m.
It's over $3.
Yeah, we've gone from 297 up to 301. So it'll be interesting to see how these line up. We're going to jump into the 11 a.m.s first. Now, what's going to be kind of tough here is that we've gotten some volatility already in terms of these may not line up perfectly well, looking for option trades on both sides of the market, because as you can see for the 11 a.m.s, your only option if you wanted to buy both of them would be using $3. Now, not the end of the world. We're at 301.
Yeah.
What we're going to see is even 301 too, because this ticks in tenths of a penny. That's about $12 of intrinsic value that this contract has. So let's put this in. So market's trading at 301.2. We're getting in at 301.9. So we're paying $12 of essentially intrinsic value. We're paying the remaining $7 in premium. So the bullish spread in this trade would cost us about $19. If you wanted some exposure to the negative side as well, you could be selling the spread that starts in the similar area. And as you can see, this is the same exact premium, but no intrinsic value.
Right.
So you're paying $7 in premium for both of them.
That's pretty cool how that works.
It is. It helps you understand the pricing of these, where, okay, that makes sense. Now we're paying, as this ticks up, you're looking at about 13 ticks of intrinsic value to the upside, vice versa, no intrinsic to the downside. So that trade costing you about $26, which represents 2.6 pennies of movement away from $3.
And that's the 11 o'clocks.
And that would expire at 11 o'clock. So let's jump to the noons. Close these out. Now, they're going to have the exact same prices. Now, when I say it's like kind of unfortunate we moved, because if natural gas was trading right at $3, you might be able to get a trade where you're just paying premium of maybe $9 or $10 on each side. So you're costing you $20 as opposed to $26. And percentage-wise, that turns into big numbers when you're talking about, because what is that? That's 30% extra money you're putting up for 26 versus 20. And you start doing those percentages, they add up.
It's good when you do it that way, because 6 pennies doesn't seem like it's 30%.
No,
but it is.
And it's not, just to put it, it's not 6 pennies, it's 0.6 of a penny in the price of natural gas, and it's $6 in your contract, but percentage-wise, it is, because, that's where it's so nice when you're able to get in for, 2 pennies. Well, geez, then all you need is 2 pennies of movement versus needing 2.6, 3 pennies. So here's the 12 o'clocks, same exact spreads. So only the difference here is that you're going to be looking at an extra hour. So the bullish trade is going to cost us about $20. Pretty similar. You have about a 12 cents of intrinsic value. $12, which is like 1.2 pennies of intrinsic value. And the rest being premium. And on the vice versa side, it's probably going to be exactly similar. And as it is, that'd be costing us about $8. So here's a great example that not much money for that extra hour, right?
No, it's not.
Like nothing almost.
Yeah.
I mean, it's, you're talking about $2, which is 0.2 of a penny that you're paying in the market of natural gas for that extra hour. In my opinion, that's worth it.
Oh, yeah.
If you're looking for volatility, which you should be if you're making this trade, that seems like a pretty affordable price for the extra hour to have that, exposure.
Yeah.
For sure. Now, let's see how the 230s line up. So this is nice.
They're going to line up too.
They are. And I'm just going to jump right to the dailies, because these are 50 cents.
Yeah.
And just the reason why, and I'll pull them both up, is because they're usually identically priced as they exactly are. So here's a great example. Here's your 50-cent spread. Here's your 40-cent spread. Exact same bid offer.
Yep.
If you're going to be buying this, why would you ever be capping yourself out for zero extra? So that's why, normally, and the reason why the market isn't charging you is because realistically, there's almost a 0% chance.
Right.
But like we say, it's not zero.
Not zero.
So if they're not going to charge you for it, why not have that probability on your side? So we'll go to the 50 cent, and let me close this out, jumping back to the full dailies. Here's our bullish spread. Whoops. There's going to be our bearish spread. So you got 50 cents of exposure to the upside, to the downside.
Yeah.
Same thing. We're going to have our intrinsic value of about $11. So this has cost us 28. This costs us 17. Again, what's perfect here is, see the difference, $11?
Yes.
There's your intrinsic value. The rest is premium. So you're looking at $45. But the key there is that you have exposure till 2:30.
Right.
And you have exposure all the way to 50 cents. So we'll see what happens. 10:27, we get those numbers. In 3 minutes, we'll find out what happens.
Right back.
Totally.
Stay right there, folks. You have the Dow right now down 19. Nasdaq up 2. S&P's off 2.5. We'll come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Natural gas inventories. Let's see. We got a build of 66 BCF.
66 billion cubic feet. Median estimate was 72. Pretty close in line. Shouldn't be anything too dramatic, but let's find out. We'll jump back over. Whoa, look at that bar, man. What happened there? Look at that spike. So you talk about quick fingers, man.
Wow.
Yeah, I mean, not too big of a miss, and we'll go back to those numbers and break down a little bit more about what they talk about. But we're trading at about 301.2, right?
Yeah.
About 1.2 pennies above 3. 3 would have been our pivot point that we were using. All of these trades would have had a little bit of a bullish bias today because you start with the intrinsic value to the bullish side.
Yeah.
Not the kind of action you would want if you were trading these, because 3 on the dot becomes your max loss. And geez, we're within 7/10,000th of a penny, of a dollar right now of that number. But the good thing is it's 10:31.
Yeah.
Would have until 11
You
or
got
12
time.
or 2:30, depending on
Right.
what we chose. And you always like to see some big spikes one way or the other, as opposed to just kind of fizzling
Oh,
out
yeah.
into the news.
Big time.
So a little bit of reaction, down about a penny from those numbers. And let's jump back to that. Let me find the right screen that we're on. Is it that one? No, we're jumping around. I think it might be that one. There we go. Yeah, so the East had a rise of 24 to 430 being the inventory. Midwest had a rise as well. Every area actually had a rise, 24, 6, 5, and 7. Inventories are at about 501 billion cubic feet, below the 5-year average. Yeah, so it looks like the range was anywhere from 66 to 77, and it comes in at 66. I mean,
Yeah.
nothing too dramatic, not exactly what you'd be looking for if you were trading the volatility. I mean, what you want is a huge surprise, obviously. Something like we got
Look
yesterday
at
in
the
oil,
It
right?
looks like it's getting a little more.
Yeah, we're right at that $3.
Yeah.
I mean, it is, you know, again, we're only 2 minutes afterwards. It's quite a bar. And, geez, we've had some volatility like we talked about from this morning. We're
Look
at
at that.
297 not long ago. And, yeah, anywhere, depending on what you were trading there, you needed 1 penny, like 2.5 pennies.
2.5, 2.6,
Yeah,
right.
somewhere around there for the 11s or the noons. So we'll check back in. We'll see if that natural gas market reacts.
Let's check in with our man Paul from Henderson, Nevada. Paul, what's going
love
on,
it.
brother?
Oh, he dropped. He must be trading that Bitcoin, man. It's rocking.
Look, He was looking at WBA.
Oh, he was.
Yeah.
He likes
So-
volatility. He's over to the health stocks today.
Walgreens. Yeah. Well, I hope he's shot Walgreens.
I hope so too, man.
Because it's an ABC down, and it's a big one. You know, it's getting blown out of the water.
Seems like they're in the crosshairs for Amazon,
Ooh.
man, and I would not want to be in those crosshairs.
Telling you, man, it's pretty intense.
It seems like that industry, and this is just a fundamental take from somebody who doesn't understand the fundamentals of healthcare and prescriptions, but man, they are ripe for
They are.
getting raided. You know, in
Right.
terms of once you transfer your prescription, you just transfer it. You know,
Right.
you become a creature of habit. Where
Right.
once your account is with somebody, and if Amazon, they just bought that company that does online prescriptions.
Right.
Well, what's to prevent? Why do you need to drive to a Walgreens to pick up your subscription? It seems like I should be able to click a button online and it shows up at my door.
Right.
I'm sure Amazon's saying the same
And
thing.
I heard the number this morning. They had this number on Bloomberg that the people that are on prescription drugs, like, unfortunately, they take a lot of different pills. So
Sure.
the way that this company works is that they send you the pills, but the pills are like you got to take this pill at this time and this time, and it's
okay,
all
they really
it's
stagger it or
bro-
organize
it's
it.
broken
Yeah.
down.
Okay.
And it's not. It's a convenience. It's not a price deal.
What does that mean? Convenience. not a
Meaning
price?
that they're not saying, I'm going to sell this cheaper to you. They're saying that
Okay.
you're going to have the correct medicine at the
Okay.
correct time, and so it's a convenience
They're
deal.
servicing their customers
Yeah.
better as opposed to
So-
competing on price. They're
right.
competing on service.
And of
Cool.
course, then you got Amazon, who we know.
They're going to compete on both, right?
Exactly, exactly. Amazon, I mean, is the ultimate of the aspect of bringing price down. And we all
Yeah.
know that, listen, man, the spread in drug companies is astronomical.
Yes.
You know, so.
Yeah.
And it's a third-party payer, so we'll
Right.
see how this thing shakes out. But
Yeah.
I think it's going to make a big difference, man. You
Yeah,
know?
no, I'm still. I mean, last night I was hearing headlines about different type of Prime benefits for Whole Foods still, right? In terms
Yeah.
of, man, they come in and price is a big factor, especially with their Prime deal and how that will play out.
Oh, did you see? They got a whole new business, delivery business. So.
I did see that headline
So
as
check
well.
this out, folks. If this is pretty cool. I mean, it doesn't look like the numbers are huge
No, that's
out
not
here.
it. There's a lot of Amazon
There
articles
is,
today.
but
That's,
this
they
is
have-
what Amazon's doing is
So
that
here we go.
they will get you in business.
Is this what you're talking about
yeah,
for the delivery?
right.
Yeah. So they're recruiting people to run small-scale delivery services of local delivery networks of up to 40 vans.
Right.
Pick up packages from one of Amazon's 75 delivery stations, and each partner can start a business with as little as $10,000 investment. We'll see how the rhetoric goes in terms of the U.S. Postal Service, when Amazon does away with them, and we really find out whether they were
seriously, man,
good or bad for the Postal Service,
Yeah.
because my guess would be that that would be quite an order to lose for the
you
U.S.
don't want to
Postal
lose the
Service.
cash flow. That's a cash flow. It's a big number.
If the Postal Service didn't want to be doing it, they wouldn't be doing it right now. That's an easy selection. So, but you can see Amazon doesn't like getting middled in terms of the same thing. You know, the post office is benefiting in some capacity. So Amazon's saying, you know what? Let's not become too reliant on any one entity in between us and our customers. And meanwhile, they're going to have a bunch of small entities now,
huge,
that they'll be able to probably have greater control over.
Right.
And there you go. This is about scaling cost effectively. Vice President for Amazon Worldwide Operations. New delivery program will help meet the growth in e-commerce. We're going to have to meet this growth, and it's outpacing the growth of our core providers. So there you go. They know they need more capacity to be dropping packages on a daily basis.
It's going to be pretty wild, man. I mean, watching.
I was always wondering whether when they would come in with their own service, and this seems like, okay, they're deciding, you know what, we're not going to just start our own U.S. Postal Service. We're going to kind of like sublet it out to mom and pop or whatever it is.
We're in the Uber world now.
Right.
They turn around and say, hey, we're in the Uber world. How can we do this?
Yep.
You know, and kick in. It looks like that they're going to kick in, meaning they've made deals with car companies, with all these different companies, so that they're going to be independent operators.
Okay.
Yet they've made all these certain deals so that these operators are going to get some very good deals under the Amazon brand.
Cool.
You know, and out of the, you know.
Yeah, so it says each delivery service partner can start a business with as little as 10,000. Partners vetted by Amazon, once accepted, they'll lease Prime branded vehicles, so they're going to provide them vehicles they'll lease, but the entrepreneur will be in charge of recruiting and hiring drivers. Amazon, so it's going to be kind of a joint deal. They basically set them up with all the infrastructure. It sounds like, you have 10 grand, we'll set you up with a lease for the vehicle, we'll set you up for this. You have to hire people, you have to do all that.
Look at the next line.
The company says the program set up so successful delivery partners can make up to $300,000 in annual profits.
Now that $300,000.
I want to see how they got that math and what somebody has to do to be making that.
They got to do 40 vans. I looked at it. I said, "Whoa, that's a lot of vans." That's.
I would
running 40 people every day.
This is a PR release, so and they're capped out at 300 grand. Not to put, I know that's a great business, but you have a lot of risk going into business, and you're telling me like if I just ace everything, if I crush the market, I'm capped out at 300,000. That doesn't sound like a risk reward. I mean, I would, that's a great salary, a lot of people, but there's a lot of risk in businesses, and if that's your, because usually when you hear PR deals, that's like a best case scenario, which is why we'll see what. All right, we'll see.
Stay right there, folks. Tommy and I are coming right back. We get the Dow right now down 80. Nasdaq is off 24.
And we have a guest next segment. Jack Gleason, Major League Trading.
It's a beautiful thing. Stay right there, folks. Awesome.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow right now is down 52. You get the Nasdaq off 8. S&Ps are down 6. Let's go over to our man, Mr. Jack Gleason from MajorLeagueTrading.com. Jack Gleason, what's going on? Welcome back to TFNN.
We'll get him. Jack, you there? Oh,
We got him.
we can see him.
We can see him.
Maybe he's not hearing us.
Yeah, he's watching this market. This market is flying around.
All right, we'll see if we can get him. They're gonna pull him up. He has a few good charts for us. We want to get into him, man. He's got some hot topics. What do you? S&P, oil, and gold. We're gonna be talking. I want to talk about those.
Maybe he'll save my gold market. We'll see.
Our producers will let us know when he's ready. We'll jump around.
So, you talk about moving around. This market, folks, is moving around in an incredible way. I mean, every 5 to 10 minutes, you get the S&P is either up 10 or flat. The market's been trying to get higher. I can tell you, each and every time that the market actually tries to get and fails, that's a little problem child. It seems like the euro is basically getting some juice again. We had the euro was down. Bottom line, now you get the thing flat. Up 34.6, trading 115.87.
How about the financials if we could jump around? Because we got 13 straight days down in the financials yesterday. You want to talk about probabilities, man.
It's, you
flat. Positive by 7 pennies.
Right, and that's the if you want to, Berkshire Hathaway, bottom line, led the financials down, and, it blew out that February 9th swing low. Look at that thing.
Yeah.
I mean, that's a problem child. It's down from, $217 to 186.
Yeah.
So that's saying quite a bit. Actually, let's go. I wanted to go over to Deutsche Bank for a second because Deutsche Bank, it's saving itself this morning. But Deutsche
saving itself.
Yeah.
All right.
Well, it has this high volume low that it's going to go after, and it's like you break that low, man. Look at that thing, 998.
Okay, let's go back to September of 16, almost 2 years. Yeah.
And it's like, okay, it wants to get tested. The real question is going to be, can it handle it? Now, if we go overseas, folks, the DAX is getting smoked right now. This thing is down pretty good. You're down 216. You're below the lows of yesterday. Yesterday it saved itself. So we'll see how this whole thing shakes out. But there's a lot of movement out here right across these markets. And of course, the volatility inside the look at this S&P, man. This is like so cool.
No, as you were mentioning to Kevin, right, yesterday. Was it 43 points in the S&P just yesterday? I know today they went up and down 43. I mean, you're talking about 1.6% up, 1.6% down, like nothing.
Right, and look at, so that's 2707 to what? Actually, Was that last night, 27.17?
No, that's this morning. What do you say?
So 27. I'm looking at the top, says 27.17, but that's last night, I suspect. So,
Yes, no, that's right up here.
Yeah.
Just 4 in the morning.
Okay,
Says-
okay.
that's,
Right,
I mean,
right.
27. That's just so, yeah.
Right.
Yep.
Quite a move.
What's the VIX trading at? Can you jump over to the
Yeah.
VIX for us? Because
Look at. I think. Do we have our man Jack back?
I don't think so. I think that was from
I
one day
see.
yesterday. Yeah.
Okay.
Oh, maybe we do. Jack, are you there? Are you with us?
I am.
We love it.
Before, I couldn't hear you guys, and I'm sure I was probably just looking at the screen, wondering what's going on.
No.
Yeah, I got you.
That's a beautiful
The
thing.
beautiful technology. Well, perfect. Let's get right into it, man. We know you have a few charts that you sent over. First off, how was the Grateful Dead? How was the Grateful Dead with your dad, man?
Oh, it was awesome. I actually ended up going with my girlfriend as well.
Nice.
It was a blast. They had a great show. The venue's super cool because all they see from the stage is people. It's kind of like a natural bowl-shaped venue, similar to Red Rocks, but Wisconsin's version of Red Rocks.
Very cool, man. I've never been to Red Rock. I would love to make it there. I'll have to look at where you were as well.
Yeah.
Where were you? Where was the concert?
It was a place called Alpine Valley, which is in Elkhorn, Wisconsin. So
Cool.
you're about maybe 15 minutes past the border of Illinois.
Sweet.
And yeah,
That Red Rock
cool
is
stuff.
beautiful.
Yeah,
It
there's
is,
some
yeah.
wild people there, and it's quite the freak show. You know? So that's,
Good times, man.
So we have your S&P chart up. Talk to us.
yeah. Okay. Cool. So we had yesterday we had a regime change from last Thursday to this week, obviously. And every time I'm looking over here, people tell me, "What are you looking at?" I have all my screens over here, and I'm broadcasting a laptop. S&P 500 ran into what's called a 50% retracement short. So we had a trend change. It was trend change. It was pretty obvious in the market. And then yesterday, that 27.47 level was a 50% retracement from the high, which then ends up targeting down into a negative 23% profit target. So that negative 23% profit target in the S&P is going to be 26.78. That's that chart I sent over to you guys. You got it up.
I do.
Right now.
We're
So
looking
you
right
have
at those levels, man.
Right.
Perfect.
Yeah, clear to that 50% retracement. I got short there yesterday. Using Nadex, I sold the 27.37 contract, closed below that level. But now what I'm looking for is the completion of that 50% retracement, which is 26.78. That's when those sellers who sold that 50% retracement yesterday are going to be looking to cover. And then if we do by chance get a short covering rally up into the halfway back from the prior day's high, that's going to be 27.20. Assuming we don't get a new low today and we rally from our current position, at that point in time, I'd be looking to potentially take a short position. Just like yesterday, we got that fake out. We broke above those highs. A lot of traders got trapped. Now, one of the things I noticed yesterday, the reason I really felt comfortable getting short, is the Russell, which on the prior day was the strongest market. It was up 0.72% on Tuesday. And then Wednesday, it was actually falling, did not take out Tuesday's high. And the NASDAQ, Dow, and NASDAQ, Dow, and S&P all took out Tuesday's high. They were rallying into resistance. The Russell, which was the strongest market, should have been following. It was not. It was heading towards lows, and the Russell ended up being the worst performer the prior day. That gave me the comfortability in getting short at those resistance levels. And I am expecting us to continue in a down sequence, really, unless we can start clearing back above 27.50 area.
Yeah,
It's pretty cool. We jumped right to that 27.47, right?
I
Talk
know.
about touching that bar, like that line exactly.
No doubt. So talk to us now about the oil market. And gold, you're gonna save us on the gold market. We'll go to oil first, though.
We'll save the gold for last. Anyway, so oil obviously has had an incredible move. Anybody who's been paying attention to that market, that's been the best performer to the upside that I've been watching over the last week. I'm going to be looking for pullbacks, and these levels have actually changed a little bit since I've sent this over, because when we make those new highs, I have to adjust the sequences that I'm drawing.
Sure.
But right now, just on the higher time frame, if we continue to rally, 78.20 is going to be my daily profit target. Now, that might take a few weeks to hit, but I already have alerts set up there. And then now that those levels have moved higher here, let me just quickly redraw and calculate this. So before, the levels I had sent you were 71, 70. I'm now moving that up to 72.18. So 72.18 to 71.66. Both of those individually are going to be my support levels. I'm actually adjusting some alerts over here on my screen. So 72.18, 71.86. Those are the two daily pullback levels I'm looking. But obviously, this has been a massive breakout here in oil, and I do expect it to continue to climb higher over the next month or so and hit that 78.20. I'm sorry, 78.20 resistance or target level at this point in time.
We're going to be paying a lot at the pump, man.
We're paying a lot at the pump. Okay, well, we're going to...
Jack, can you come back with us just for a minute to cover that gold market?
Yeah, absolutely.
Awesome.
We'll leave everyone hanging on what's going to happen with gold. Perfect.
Stay right there, folks. We got Jack Gleason. His website is MajorLeagueTrading.com. Tommy and I are coming right back. We have the Dow down 42. NASDAQ is flat. S&Ps are off 4.5. We're coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Talking with Mr. Jack Gleason from MajorLeagueTrading.com, and we, Jack, have that gold contract up. Talk to us about it.
Okay, cool. So obviously, gold. I'm sure you're not pretty happy about it, but it's been in a very aggressive downtrend.
Seriously.
To put it lightly, please, go ahead. Yeah.
The next support level I'm looking at, so I'm looking at one of two trade setups, and it's one of those situations, whatever trades first. So 1243.4 on the downside is a support level that I've marked up here, and then on the upside, for level I'm looking to sell into, we're looking at 1261.7 as a single level, and then above that 1265.4. So I have my alert set there. If we do rally higher first, I do expect us to eventually come down into that 1243.4 level until we make a until we hit that. I don't think we're going to have a significant bottom. So if we do get a rally before it, I'd actually prefer to short into the long and then flip my position and go long. So those are the resistance levels. Once again, 1261.7 1265.4. Downside support 1243.4.
1243.40. You remember that number, man.
Hey, it's been making its way down there. The bottom line, since April 4th, it's been a downtrend, a pretty amazing downtrend, actually.
Seriously.
You know what I mean? So, and you know,
now it's like oil's like this and gold's like this.
yeah,
right?
No,
I know.
And you know, the good old dollar index, you know, we'll see whether this 95 is going to hold. I mean, it's been testing that 95 the last few days. You know what I mean? So that's your swing area from October of 2017.
Okay.
So it's going to get intriguing watching this whole thing shake out. Well, listen, Jack, it's always a pleasure. Folks, you can check out Jack at MajorLeagueTrading.com. Of course, you can check him out every Thursday right here.
Yeah, 1040, and you can go over there and sign up for free nightly videos he's got on the site. Great information. Jack, we appreciate the great information, man. Thank you so much, and we look forward to talking to you next week.
Take care, guys. Have a good one.
You
Have
as
a
well.
great one, man. Have a safe one. Stay right there, folks. We got swim lessons coming up next. Dow's up 32, NASDAQ down 3, S&P's a flat. Thanks, Bill.
Thanks, man.
Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what